Welcome to Accounting Space. This video, we want to look at the preparation of a statement of profit or loss and comprehensive income. So, this is the question that we have. That is question 3 of this question paper. And our question is: the following relates to mattress cross corporation. We're given a trial balance of 28 February 2016. Whereby we are given a list of balances that we have here in the form of a trial balance. So, if you go there and go to the next page of the question, you see that we're given also additional information that you need to go through, arranged from 3.1 to 3.8. So all the required part and question is statement of comprehensive income for the year ended 28 February 2016. So this is what we have. So we go to our other section. We will try to see what do we have in terms of the presentation of this statement of comprehensive income. So we have got a year which is the statement of profit and loss and comprehensive income for the year ended 28 February 2016. So obviously in this statement we are going to start with the figure for our sales. So we are going to say our sales, and then I will try to find out what figures do we have in terms of sales. We can go to our list of balances. So you see that we have got sales here, and our figure is 554,000. So basically, we are going to put our 554,000. But before you put, to check for if we have got any allowances, data allowances, or sales returns in the trial balance. But you see that we have got nothing. And also, you have to go to additional information to try to see if we have got anything that is uh, is to adjust the figure for sales, and it might be sales returns omitted or other adjustments that might change the balance of sales that we have. So if you go through, you see that we have got nothing that is adjusting of sales. So it means we are taking the figure that we have here, which is 554,000. So we go and then and put our 554,000 for our sales. And we are going to put that figure in the last column that we have there. So here, if we Egypt, we see that we have sales, which is a figure of 554,000. Then beneath that, now we are now going to the section of less cost of sales. So on the cost of sales, we check if we are given the calculated figure of cost of sales in the list of balances. So you'll see that we do not have the figure of cost of sales. So if you don't have it, obviously you have to start with the opening stock, you add purchases, you add any carriages if they are there, and then you subtract a closing stock to get your figure for your cost of sales. So from the information that I given, you see that opening stock is here, which is our trading stock on 1 March 2015, which is 30,000. So we are going to pay and put our 30,000 as our opening stock. So here we are saying opening. So we are saying 30,000. And the figure for cost of sales is going to come here after we have calculated it beneath there. So we are supposed to add our purchases. So we go again to check the figure for purchases that we have in the trial balance. So we're going there, you'll see that the figure for purchases, we have it beneath there where we have our purchases 276,000. So obviously you check also in terms of purchase returns in the trial balance. But if you check there, you'll see that we do not have any purchase returns or creditors allowances that are going to reduce the figure for purchases. So we go to additional information again and check if we have got anything that is going to reduce our figure for purchases. So you see that there's nothing. So in that case, we are going to check the figure that we have here, which is 276,000. So we go there and indicate 276,000. So after adding purchases, we check if you've got any carriages in terms of carriage inwards or carriage on purchases. So going through the information that we have, we see that you're not having any carriages. Then you can also try to check in additional information if you've got anything that has to do with our carriages. Maybe they were omitted. So if they were omitted, they'll be included in the additional information. Then you can include them in our statement of profit and loss. So having said that, now it means we can go to the next step whereby we are supposed to subtract your closing stock. So you can just say less closing stock. And obviously the figure for cost of stock, we get it in the additional information. Here you see that on 3.2, the physical stock contribute the following on hand traded stock 52,000. So you only take the figure for traded stock, which is 52,000. So we come here, you'd see that we have 52,000. So having done that, now we can now be able to calculate the figure for cost of sales. Cost of stock, remember we are saying less. So we are subtracting, you can put it in brackets. So we are saying 10,000 plus 276,000 minus 52,000. And then the net figure that we're going to get to come here is our 254,000. And we are also saying, we are saying less cost of sales, so we are subtracting again to get our gross profit. We said it's going to come here. So by subtracting 554,000 minus 254,000, you are going to get your answer 300,000, which is your gross profit. So from there, we go to the next section whereby we are now saying plus in other income. Whereby we the total for other income in the last column there, here, that's where we're going to give our other income total, but we are going to list them beneath them. So we go to what other income do we have in the question. So if you go down, you see that the first one that we are seeing, you've got commission received here with an amount of 3,100. Then you also have to check in additional information if you've got anything that is affecting our commission received. Go item by item and you see that there's nothing that is affecting our commission received. So in that case, we're going to take our 3,100 as our commission received. So we come in. So we are saying commission received, and the figure that we have is 3,100, and put it in this column. Then go again to the list of balances to check in other income that we have after commission received. We've got interest on loan to member. Interest on loan to member, it's an income again, this one. And here we are told that it's 5,000, but 5,000 is the one that was received. It shows the total amount received, but the amount that we want is the amount for the period. So get the amount for the period, we go to the balance that we are given, and there for interest interest on loan to member, which is this one, which is interest on loan to relator, which is here, which is 30,000. Then you check the additional information, what is the percentage of the interest? Remember, 30,000 is the total amount of the loan. So you want the interest, you go to additional information. Let's see what is it saying. If you go to 3.7, say interest on loan from member and interest on loan to member. Remember, we are concerned about interest on loan to member are provided as at 50% and 10% respectively. So to member, it means it's our 10%. And take note that 4,000 was paid by Relato on 1 December 2015. So there it now means we are going to have two different amounts of loan loan balances that will be there, that will be used to calculate with the 10%, because 4,000 was paid on 1 December 2015. And we know that our year is ending on 28 February 2016. So if you say December, January, and February, it means it was the period after the repayment of 4,000 was 3 months. And before, this one is after, and before, if you say 12 minus 3, we have 9. So we've got 9 months before the repayment and 3 months after the repayment. And this 4,000, if you go to the balance that we are having here, it means the balance that we are giving for Lerato 30,000, and that 4,000 had already been subtracted, because the balances that we are given there at 20th February 2016, which means it was after the repayment. So this balance is after the repayment. So it means before the repayment, it was 38,000 plus 4,000. Before the repayment, it was 38,000 plus 4,000 that was repaid on 1 December to get your 42,000. So before the repayment, you're going to use 42,000 as the total amount of loan. Then after the repayment, the balance will be 38,000. So we go there and just make that calculation. Come here. So we start by calculating using the the interest before repayment, and the percentage is 10%. So you're saying before repayment, the balance was 42,000. So you're saying 10%, 10 over 100 times 42,000 by 9 over 12. You can see what we get there. Let's just try to see. 10% is a decimal, obviously 0.1, and then we multiply by 42,000, and then we multiply by 9 over 12. So uh, you're going to get your figure as 3,150 before, and then after the repayment it was now 38,000. So we're saying 10 over 100 times 38,000 times 9. It's now 3 over 12. So here, I remember the month that we have after is 3. So say 3 over 12, which is, we calculate that, see what we get there. So here we are going to get to 950. So it means the answer that we get there is 950. Then for the total interest now, we are now seeing 3,150, which is before plus after 950. Then we get total, the total interest, which is 3,150 plus 950, and then you are going to get your answer as 4,100. So 4,100 is the amount of interest that was supposed to be received for the period. But if you go back there, you would see that the amount of interest now that was actually received, interest on loan to member, we put 5,000. So 5,000 is greater than 4,100. So it means the difference was an income received in advance. So the income received in advance is now 5,000 minus 4,100, whereby you are getting 900. So you're going to provide for this prepayment, you're going to provide for this income received in advance. So basically, you're going to put it as 5,000 minus 900, so that we arrive at the 4,100 that is supposed to be for that period. So we go there in the answer section, and we are going to adjust it as such. So down here, we are now seeing interest on loan. Remember, it will show in brackets at the calculation we were said 5,000 minus 900 to arrive at the interest which is about to receive for the period, which is 4,100. So this is what we, then obviously we go again to check what is to have in terms of our income. Interest on loan from member now, it's now an expense. We're going to show each other expenses, and then what electricity, looking for another income we don't have. So if we have exhausted our incomes in the trial balance, we can as well go to additional information to check for other incomes. So let's just try to remove this. So if you go there and try to go item by item, try to check for other incomes that might be there, you'll see that on 3.4, there is an issue of provision for bad debts. It must be adjusted 4.5% of data. So but before that, we are told that there are bad debts of 1,000 which must be written off. So it means we are going to subtract this 1,000 from the data control balance in the trial balance, then the net figure calculated by 4.5%. So we go there, say the data control figure that we have is 101,000. Then we're going to subtract 1,000 for the bad debts. Remember, we got our bad debts here, a further 1,000 which must be written off. So basically, we subtract each from 101,000 of data control figure that we have there. So we say here, percentage is 4.5%. So we're going to say 4.5%, 4.5 over 100, and then you multiply by in brackets, you say 101,000 balance of data control minus the bad debts that we are written over 1. Then obviously We simplify it further, it becomes 0.045. Here and then here on 101, 1,000 minus 1,000, you get 100,000. So you calculate it there, you see that the figure that we are going to get there becomes 4,500. Then this 4,500, we compare it with the provision for bad debts for the previous period, which will be given here in the list of balances. Provision for bad debts is here, and we have it as 4,800. So we come here and we put it as 4,800. So we are seeing that it's a movement from 4,800 to 4,500. Because the current day is 4,500, so it's a decrease in provision for bad debts adjustment. So if it's a decrease, we know that if it's a decrease, we show it as an income. But if it's an increase, it's an expense. Put it under expense. So in this case, it's a decrease. So you can just calculate the size of the decrease, whereby we're saying 4,800 minus 4,500. And you're going to get your 300. So 300 is the income. So we go there and just summarize that as we are saying provision for bad debts adjustment. Provision for bad debts adjustment, whereby we are saying in brackets, we are saying 4,800 minus 4,500. So we got our 300. So this is what we have. Then we've exhausted our income, so we can add our income to get our total of other income, 2,100 plus 4,100 plus 300. We calculate it as such, see that the total that we are supposed to get for other income should come here, whereby we are saying the total, if we add correctly, we're going to get 7,500. And then obviously other income, we are also supposed to add it to the gross profit figure. We are saying gross profit plus other income, then you get the figure for your gross operating income here, which is supposed to be 307,500. So this is going to be your gross operating income. So you're saying gross operating income. Then we believe that we are going to include our expenses now, whereby we are saying less expenses. So for less expenses, we go to our list of balances and we try to check all the expenses that we have going down. First, we've got salaries and wages here. We put our salaries and wages, which we just want to take note. So our salaries and wages here, and we've got an amount of 93,000. So we go to external information to see any adjustment about salaries and wages. So we come here and see that we are now looking for adjustments for our salaries and wages. We go down checking. We've got the first item on 3.1 included in salaries and wages. Our salaries for members, which is Malebo 12,000 and Alerato 13,000. What does it mean? It means we have to disclose them separately. Malebo 12,000 and Alerato 13,000. And then we subtract them from the figure that we are given for salaries and wages, which is 93,000, and separate and disclose them separately again. So basically, we are saying if you say our 20,000 plus 13,000, you're going to get your 33,000. And then 33,000 subtracted from the figure here that we are given here, you say 93,000, 93,000 here, minus your 13,000. You're going to get your 90,000. So this is going to represent your salaries and wages, 90,000. And then the other two, we are saying there, if when we added, we got 33,000. So we subtract 33,000 there, 33,000, and then the figure that we are supposed to get there is going to be 60,000. So we can say here it's 60,000. So we're going to see show it as 60,000 for salaries and wages. Then we disclose the other separately. So we come in, we are saying salaries and wages. Salaries and wages, and we are saying that the figure that we have is 60,000. Then we disclose the other separately. The other that are for members that are being highlighted there. So we see that we are given the one for Malebo 20,000 to disclose it separately. The Rato 13,000, we are going to disclose it separately there. So we come in, we are going to say salary Malebo. And the amount that we have there is 12,000. They also say salary Relato. And the amount that we have there is 13,000. And then we are done with that one. And then we try to see the next expense that we have. We've got insurance, which is 4,000. But before we put our insurance, we also need to check any additional information that is affecting our insurance. So we go there and try to see what we have affecting our insurance. So you can go through the additional information and try to check for those that are affecting insurance. So we come in, you see that if you go to additional information 3.5, included insurance and annual premium of 1,500 for policy that was taken on 1 September 2015. So this policy means it's from 1 September 2015 to end of August, which is 30 August 2016, of which our year is ending on 20th February. This end of February. So it means if you count from February, we have got our March, April, May, June, July, August. These are not inside our financial period. We have to remove them. We 1, 2, 3, 4, 5, 6, 6 months. So if you say 6 over 12 times annual figure 1,500, you're going to get your 750. So we are going to subtract 750 from the figure of insurance that we are given here, which is 4,000, to get the figure that is supposed to be in the statement of profit and loss. So 4,000 minus 750. So this is the calculation that we have. So insurance, we are saying insurance, so in brackets, we are saying 4,000 minus 750, and the answer that we get is 3,150. Then we can go to check another expense that we have from insurance. We've got commission received, we adjust it under the income. Go to stationery. Stationery is also part of an expense. 2,900 was a chest of stationery. So we need to see if there was stationery that is remaining at the end of the period, so that it gets subtracted from the figure of stationery to get the one that was used. So 2,900, and then go to balances at the end of our stock to see if there's stationery. So you see that here we are given it. We're given it as stationery 2,000. So we are saying this 2,000, we are going to subtract it from the figure that we are given there is stationery, which is stationery. We are saying is 2,900 here, indicating our stationery 2,900, and then at the end of the period, I will see. But if you go to the end of the period, remember we wanted the stationery that is remaining at the end of the period. But the figure that we are given here is not the figure of stationery that is at the end of the period. We are given stationery used as calculated. So its year is already calculated as 2,000. But if you were given it as a part of stock that was remaining at the end of the period, we're supposed to subtract it from the figure that we have in there, which is 2,900. So in this case, it means what is remaining at the end of the period is 900. But here we're given it as calculated as 2,000, so you can take it as it is, whereby we are saying stationary 2,000. So we are saying stationary. We have our 2,000. Then we can go to our list of balance. Next we've got repairs, which is 8,900. And we can go to additional information checking, anything to do with repairs. You go through, see that there's nothing. So you check the figure that you're given for repairs here, which is 8,900. Come here, say repairs. Then it's 8,900. Then we go back again, check after repairs, we put our interest on loan to member, we've already adjusted that one. But interest on loan to member now, 1,000 indicates what was actually paid. But what is for the periods is one figure that we want, so we go to extra information to see how we're going to calculate it. So you're told that interest on loan from member is 15%, as indicated there, 15%. So we're just going to say 15% of the total interest on loan from member. Go say there and check that balance of loan from member. You see that from my label, it's from member, which is 10,000. So you're going to say 10,000 times our 15, our 10,000 times or 50%. So we can just say interest on loan interest on loan from member. So in brackets, we're saying 15%, which is 0.15 s decimal times 10,000. And then the figure that you're supposed to get there is 1,500. It's just try to check in terms of it's 1,500, so we are having 1,500. So here we can present it in the form of showing the comparison that we have of 1,500, which is supposed for the period, but what was received is 1,000 here. So it means we have got an owing amount of interest or loan from member of 500. So that 500 we should show it in the final calculation. So here we can just remove this final calculation by saying it's brackets 1,000 plus the 500 that was not paid to arrive in a figure that we have 1,500. So this is what we have. We go to the next part whereby we are given after interest on loan from member, we've got water and electricity 4,600. Then we check additional information. If we have got an adjustment which is affecting water and electricity, of course you have to go each and every adjustment. Try to go there from the beginning going down to the end. We see that we've got nothing. So in that case, we take the figure that we put electricity 4,600. So here we are saying water and electricity. And then the figure that we have there is 2,600. Then from there we go again, we check after water electricity, go to the remuneration of accounting officer, which is 3,500. There's no adjustment again of that remuneration, so here we're just going to say remuneration. Of accounting officer, which is 3,500. Then we check on the next one, which is now we have purchases, which is not part of that. And then we go to extra information. We might have another expense that is not listed in the trial balance that we need to include. Remember, we've got non-cash items, non-cash expenses. They won't be reflected in the list of balance. You can only get to know about them when you go to extra information. So we go item by item. The first one that we have is bad debts. We've got 1,000. So we've got in a bad debts. Remember, it's not there in the list of balances. So we're just going to say bad debts 1,000. If you go back there, maybe you want to know how did we arrive at 1,000 as a bad debt. the written paid tax of 1,000 must be written off. So it means when we have something that is mentioned in the additional information, it's something that was being omitted in the list of balances. So we're going to put them there. But if you go to the list of balances, you're going to see that there's nothing about paid debts, which means these are the new paid debts that are there for the period. That's why we've just included 1,000. But if we had the balance in the list of balances, we're going to take that balance and add them to 1,000. So in this case, we don't have to go to provision for paid debts. We've already adjusted and we discover that it's under income, so we can leave it. Then we've got depreciation as a non-cash item again. We are supposed to calculate it whereby we are given 20% per annum on straight line method on vehicles. So vehicles, so we can just say depreciation in vehicles. We're given it as 20%, which is spent over 100. 20% is spent over 100. So let's say 20 over 100 multiplied by the cost of vehicles, which we have find there is 30,000. 30,000 vehicles, it costs 30,000. So we calculate it like that, we multiply by 30,000. So we see that the answer that we're supposed to get there is 6,000. Then also have depreciation on equipment. So on equipment, we are saying the rate is 10%, but it's only diminishing balance method. So remember, when it's a diminishing balance, now we say percentage times carrying value, where we first calculate the carrying value by saying cost minus accumulated depreciation. So we go there and find that our cost is for equipment given it here is 14,300. So we're going to say number is 10%. So 10%, we say 10 over 100 times carrying value, whereby carrying value you're saying cost minus accumulated depreciation. So we check for the figure for cost 14,300, accumulated depreciation, equipment we've got 5,300. So we try to simplify it further with first by saying 14,300. Then you subtract your 5,300. And you get to get your 9,000. So basically, if you simplify it further, it becomes 10%, 0.01 times your difference there is 9,000. So obviously, the final answer that we're going to get is 900. So we are going to say 6,000 for vehicles plus 900 for equipment to get the total depreciation. So we see depreciation. And then in brackets, we can show the working by saying 6,000 plus 900. And the figure that we get is 6,900. So this is the last part of our expenses. So we can add from 6,900 going up to or 60,000 there to get the total of expenses, which is supposed to come there is 124,650, which we say less, so we subtract. So we subtract gross operating income minus expenses, and you get the figure for net income or net loss. So if you subtract there, you see that the figure that we are going to get is a positive figure, so it's net income. So here, the answer will come here is our 182,850. And we are saying net income before tax. Net income before tax. So this is what we then we go to the next step now, whereby we look for the tax. How are we going to calculate the tax? We go to additional information. Trying to see what we have in terms of calculation of the tax. But if you come here on the last point 3.8, income tax is calculated 28%. So basically, we're going to say 28% times the income before tax. So we are saying income tax in brackets 28% is 0.28, then you multiply by 182,850, which is this figure. Get the figure for tax, which is going to be 51,198. Then we subtract it from the figure that we are using there for net income before tax, 182,850 minus 51,198. You're going to get your 131,652, which is going to be your profit for the period. So this is the last item that we have on the calculation of the profit for the period, which is 131,752, being a positive figure. So this is what you guys are going in this video. Hopefully the video was helpful. Let's stay tuned for more videos to come. More typical examination questions are going to be uploaded. Let's subscribe and share. Let's turn on the notification button. Let's stay notified of new videos that are going to come, which are typical examination questions. Let's share the link to our colleagues who are doing financial accounting at 6. Yes, for this video, I'm signing out. Let's meet again in the next video.